Welcome back. You're watching Business Lunch on CNBC-TV18. Well, the IMF revises its global growth estimates for 2025 and 2026 higher than its April estimates on the back of lowering risks and hikes India's growth forecast for FY26 by 20 basis points, saying the external environment is more benign than earlier expected. My colleague Ritu brings us all the details. Ritu?
Well, India remains somewhat of a bright spot in an otherwise cooling global economy. According to the IMF's latest World Economic Outlook update, India's growth forecast holds steady at 6.4% for both FY26 and FY27, which is higher than the April estimates, making India one of the fastest growing major economies. In calendar year terms, India is expected to grow at 6.7% this year and 6.4% the next year. Now, the fund attributes this resilience to a more favorable external environment and sustained domestic demand as well. Globally, growth is projected to grow at 3% in 2025 and 3.1% in 2026, which is a slight upgrade from the April forecast, but still below the 2024 outcome of 3.3% and the pre-pandemic historical average of 3.7%. The boost, IMF says, is largely driven by front-loaded trade activity ahead of the expected tariff hikes, easing financial conditions, and fiscal expansion in some key economies. Growth in the advanced economies is forecast at 1.5% in 2025 and 1.6% next year, while emerging and developing economies are set to expand by 4.1% this year and 4% the next. Global inflation, however, is expected to ease to 4.2% this year and thereafter to 3.6%, with significant cross-country variation. But the IMF warns that the risk to this global growth outlook is tilted to the downside. A return to higher tariffs, unresolved trade tensions, and rising geopolitical conflicts could hit the global supply chains and fuel commodity price spikes. On the upside, though, a breakthrough in trade talks could improve confidence and spur investments. And so the IMF urges policymakers globally to reduce uncertainty with transparent trade rules, very targeted industrial policies, and credible fiscal frameworks. Central banks, meanwhile, says IMF, must stay nimble as inflation and trade shocks will evolve.
Ritu, thanks a lot for that. Now, strong waves